Welcome to Digital Asset News, taking the top stories in cryptocurrency and digital assets and breaking them down to bite-sized pieces. Today, this is actually the video that I had previously recorded on June 30th, 2020. The reason I'm uploading this again is because it was mysteriously deleted. I've already contacted YouTube, they did an investigation, and from what they tell me, the person who deleted the video was me. And I can tell you right now, I did not delete this video. It was a pretty good one. It had a lot of views, a lot of engagement, and people were enjoying it, so it made no sense to me. However, I'm going to have you watch it, and you be the judge, and let me know if you think there's anything in here that would cause this video to be mysteriously deleted by the powers that be. All right, let's jump right in. Got some interesting stuff. First up, helicopter money is coming, and it's actually going to be good and bad for Bitcoin and the rest of the economy. Also, an update to the mainnet launch provided by Charles Hoskinson, where he also talks about how Cardano differs from Bitcoin and Ethereum. And finally, we're going to take a look at a fantastic interview brought to you by Unchained Podcast. This was Mike Novogratz and Raoul Pal, and they sat down and talked with the host about what is going on with Bitcoin, where it's going to go, and what potentially we can all expect in the next months and years to come. But first, what's going on with the market? Well, it looks like everything is going pretty much sideways. Bitcoin is at 9130, and over the past 24 hours, there has been approximately 0.0% change. So that's fantastic. 7 days though, down 6%. Ethereum over last week, down almost 8%. Tether's Tether, XRP, 17 cents, wow. Bitcoin Cash, SV, everything else pretty much the same. Stellar up by 2.7%. So nothing really fantastic, just pretty much a sideways days. Except for Compound, they took a little bit of a dip, 7.6 and 24% over the last week, which not really surprising. We'll see how that project works out. I think it should do good things as far as DeFi, but my money's on Celsius. All right, before we start, I wanted to make mention of, I did a poll, and I actually had a post on the community where I had asked a question about eToro. If you don't know, in the description of pretty much all of my videos, I had a referral code for eToro. The problem is that I kept getting responses by people who says they were having problems. So I actually reached out to eToro, and I had a couple of issues myself. And it is still unresolved, and it's been now going on 2.5 weeks. And that was actually an issue that I have with finances. There's another issue I had that we were going back and forth as far as like providing a dollar cost average versus trader challenge. I want to do a couple things and kind of bring attention to eToro. And this has been going on for 3 months. And so that's one issue. But financial issue shouldn't take 2.5 weeks to really clarify. And the customer service, in my opinion, has been catastrophic, we will say. So I just asked the question to everybody else. I thought, well, maybe it's just me, maybe I just have a problem. But then, so the first one, I had 29 responses, and it was all pretty much negative. And then I went a step further, and I just said, hey, for those of you who had interaction with eToro, tell me how bad it is. And I was expecting to be somewhere between 3 and 4. And 1 was awful, and 5 was outstanding. And I thought maybe it gets, majority 4s and then some 3s. But really what it is 28% of you said it's awful, like the worst of the worst. And then 17% said it's really bad. I mean, not the worst, but it's pretty bad. And if you look at that, I mean, that's a huge amount. We're looking at, what, 45%, somewhere around there, 44, 45, 46. And then the next biggest one was 40. So if you have customer service that is, 85% awful or just, kind of crappy, I can't promote that. So I've already gone through most of the videos, and I won't have an affiliate link with that. Same thing with Coinbase, because, why would I promote something that sucks? So that's it. So thanks for giving me your feedback. Really appreciate it. Let's jump into today's stories. So first up, helicopter money, everybody's favorite. A U.S. stimulus-backed rebound could fuel a Bitcoin bull rally. Here's why. And this whole article is great. It's well written, everything else. But the thing is that you have to understand that helicopter money, it can only take you so far. And really, it's going to be bound to fail. I'm going to tell you why. So what's going on is that the benchmark cryptocurrency, and they are talking about Bitcoin, surged 0.78% to a whopping 91.84, a move that aptly tailed the recovery sentiment in the S&P 500. I love that word surged, like it was just so fantastic. Cryptocurrency digital asset market, it is not the S&P 500. So when we get a 1%, less than 1% surge, that's not a surge. that's a blip. That's a yawn. That's nothing. So that's something that we're not used to. And maybe in the traditional finance, that's awesome. But for us, that sucks. So anyhow, it goes on to state about speculative optimism. S&P 500's Wall Street peers, NASDAQ Composite, and Dow Jones also inched higher by 2.3% and 1.2% respectively. The Wall Street Journal credited pure speculative optimism for the S&P 500's rebound, knowing that expectations of a new stimulus package kept traders bullish about the index. So here's the thing. This to me is it's scary on many levels. You got a bunch of people who they know one thing: buy the dip, because they've heard it for so long: buy the dip, buy the dip, buy the dip. But the problem is that you've got people who have really no idea what they're investing into. Like Hertz is a prime example. You got a ton of people who invested into that because there was a huge dip. Problem was, Hertz went into bankruptcy. So good luck getting your money back. And that was a big FOMO type of thing, and people are going to end up getting wrecked. So we see this type of thing where people get stimulus money, they get helicopter money, they're like, well, I got to do something with it, and I hear this thing to buy the dip, and then Robinhood is really easy to use, and then boom, I'm just going to just dump it all in that. And then it's just not a good thing to do, I believe. So when we get the stimulus package and then the S&P 500 goes up, people are like, oh, the economy is doing fantastic. No, that's not how it works. So I think the smart money is still going to invest because they know it's going to go up because the Fed's going to bail everything out. But if you are actually trying to invest for the long term, that is insane. I see a lot of problems coming up, and I don't know exactly what's going to happen because I'm not Nostradamus, but I can tell you that this cannot last forever. So I don't think that helicopter money is sound economic policy for growth, but let me know what you think in the comments section. I just don't see it. Moving on, the S&P 500 peaked at 3,200 points in June. That's amazing. It's on track of reaching its all-time high, even as conflicting poor fundamentals, led by the rise in COVID infections, jitters investors. So imagine that. During this time when we had over 41% of small businesses actually closing, which we covered yesterday, and we have record unemployment and all these different problems that are happening in the economy, yet the Wall Street still goes up. And I understand that people are, always telling me, well, the Wall Street and NASDAQ and the S&P 500, they're betting on the future. Well, how far in the future are you betting? I mean, are you betting on 6 months, 18 months, 3 years, 5 years? Because I got to tell you, this growth, I don't see a V-shaped recovery. I mean, W at best. So we will see. But it states that observers believe that the Federal Reserve and the U.S. Congress will keep injecting money into the economy to help sustain the rebound. And just so you know, for those of you who are not in the United States, President Trump is facing a re-election coming up on November. So we're like, 5 months away, 6 months away, somewhere around there. So he's going to pull out all the stops. And what he is trying to do then is there's been huge talk about a second stimulus check coming about. And this was put out by the Forbes, and they say that they don't know all the details, but we can walk you through everything we know so far, including the stimulus check details found in the HEROES Act, which passed the House and is awaiting a vote in Congress. Finally, keep in mind this is an election year. Several reports say President Trump is in favor of a second stimulus check, with the understanding that a second stimulus check may help his chances at another election. So, I mean, if I was at another election, sure, I'd be like, hey, let's just throw some money, see how it all works out. Moving on, it states, this is a quote, "There's a safety net under the bond market and the equity market," said Philip Blancato, the president of Ladenburg Thalmann Asset Management. And there's a saying, which goes, it's cool until it's not. Everything's good until it's not. So if the Fed is going to be bailing this out, I mean, really the question is, how long can the Fed keep bailing everything out? How much money can they print? How long can this go for? Because if you haven't stayed up to the news, just here in the States, we just had 15 states have paused or reversed the plans to reopen. Even in my state of Texas, everything now is back to lockdown. So you got North Carolina, Louisiana, Florida, Texas, Nevada, also Montana. Arizona was another big one that just said, nope, we can't because the round of infections is on the rise. And if you have those type of infections up and it keeps happening, then you're going to have a pullback. And this is another report which talks about, this is from the WHO, the World Health Organization. And I know the World Health Organization hasn't been on the most solid of footings because there are different problems with China and favoritism and whatever else is going on. However, I will say this, the things that they are talking about now have actually come true. And when the WHO says, "Hey, look, this isn't the worst is yet to come," everybody's like, "You're crazy. This thing is going to go away in the summer and no problems." Well, guess what happened? It is 103 today here in El Paso, and we have doubled our infection rate since yesterday. And then in my other city that I live in Houston, they've had a massive influx, and they were having problems as far as like the ICU and ventilators because they were getting maxed out. So if we think about these things and we look at what's going to happen, what's going to go on, well, this pandemic, which was supposed to kind of sputter out in this time frame, is not doing that. It is actually doing the opposite and accelerating in certain parts of the world. Now, every part of the world is not going to accelerate. We're going to have some kind of downtrodden, but if you look at what's going on, it does not look too fantastic. So in this article, it states another wave of panic could be devastating for markets as well. The stock market's V-shaped recovery could be in jeopardy. Another crash could make the structure from a W rather than a V-shape. And again, I've been saying this for a while now. I just don't see a V-shaped recovery from all the different things that are happening. I mean, if you look at retail and hospitality and public health and sports and gyms. I mean, all these different businesses are slowing down, which is really the backbone of most of the economy, especially here in America. So I don't see how we can actually spend our way out of this or print our way out of this. I think there's going to be a lot of problems coming up. But again, I mean, I could be wrong. Who knows? Let me know what you think in the comment section. But I will just say this. If there's going to be a big dip, make sure you have some money on the sidelines to buy that dip. I never am a big fan of going all in and just putting all my chips in on one day. Dollar cost average in, and then when you see some slides come, especially like big ones, if you were ready for the March slide, the March dip, you made a killing. And I see it happening again. So that's what I will do, and that's maybe you could look into that. Not financial advice, all that good stuff. And then here's something from Willy Woo, comes up with some model which predicts another bull run in a month. And okay, sure, right, whatever. I gotta tell you, like I talked about TA yesterday, and I just had a couple of people go, "I can't believe you don't believe in TA, and it's just ridiculous," and da-da-da. If that's your belief, that's your belief. Sure, go ahead. But I mean, if you're gonna think that there's a bull run coming in another month, God bless you. Great, sounds good. Anyhow, let's move on. Next up, Cardano. This is how it differs from Bitcoin and Ethereum. This is a pretty good one. Charles Hoskinson is fast becoming my favorite CEO because he just makes he just kind of says what it is. And I mean, if you believe him or don't believe him, you love him, you hate him, he's entertaining. This is all I can say. So he goes on to talk about, he says, look, this was an interview from Altcoin Buzz. He says, with Bitcoin, this was the first mover. This was the first generation. Really, it was the concept of, can you have decentralized money, decentralized transfer value, decentralized ledger, and somehow, some way, a dynamic and decentralized network will maintain that. This was not the case before Bitcoin. No one ever pulled it off. The problem with Bitcoin is that it's so simplistic. It's not a criticism. It was a design feature that the architects of the system were trying to push. He goes on to state that with Bitcoin, you can't issue assets. You can't do a complex contractual relationship or a smart contract. You can't do dApps and DeFi and all those things. I know people can be like, no, Bitcoin can do smart contracts. Sure. But from here, what he's talking about is like some type of complex contractual relationship. Whatever he means in that regard, maybe different, higher level things. I don't know. But when he's talking about these things, it's very interesting. And I'm going to show you a video in a second of why I think he's actually right. So he was going to say that the point of Ethereum, which was the second generation crypto, was to try to understand what that model looked like. So it took everything from the prior generation, decentralized ledger, the dynamic and decentralized control, but then it said, hey, now all of a sudden your transactions are programmable. And he said, while Ethereum's programmability opening doors, Hoskinson says the second largest cryptocurrency is limited by its inability to scale and share data with traditional systems. So, but there's a way around that. Ethereum 2.0 is coming out with the sharding. I mean, if you want to use oracles like Chainlink, I mean, they can pull outside data. So it's a two-pronged system, but you can't do it. He says it's not good enough to just say, hey, we're going to build a system that's blind and deaf and it doesn't really understand or see the world around it. We need to build a system that's aware that there are other systems and can communicate with more and more value and information. So finishing up, Hoskinson says that the limitations he sees in both Bitcoin and Ethereum led to the creation of Cardano. So when you bundle these three things together, interoperability, scalability, and sustainability, that functionality creates what we call a third generation cryptocurrency. Makes sense. So that's Charles in a nutshell. And there's two things that I want to make mention. First of all, I kept mentioning that the timeline was, the launch was end of June, and then maybe if we needed to, July 7th was the last part. But actually, I was incorrect. So this was an article which was written on May 29th, and I think I just left some things out. So someone corrected me yesterday. I forgot who it was. I'm sorry, but thanks for correcting me. I appreciate it. But here was the timeline essentially. Hoskinson talks about these things take place in 11 steps. So the first one was May 11th, which was the launch on Friends and Family Test Network. Next one was June 9th, Haskell-Shelley Test Network. They can run a stake pool. June 16th, public test network will be open to all users, and the wallet, and the node, and all that stuff. June 23rd, the Combinator hard fork took place. And so that's all been done, right? So we're there. Provided this test runs smoothly, and I think it has, the Shelley client will be released on June 30th and will be available for anyone to download. As a precaution in case there are problems, July 7th is available as a backup. So that's where I was going, okay, July 7th. It states here users will have 4 weeks or 3 weeks from that date to upgrade their software until the Shelley mainnet hard fork on July 29th. So I guess I was right, but not right. So just to make sure we're all clear, we're going all the way to July 7th in case there's some hiccups. And then July 29th is the hard fork, and that's when everything is supposed to be fantastic. So we'll see how that goes. So that's the first thing. The second thing I want to talk about is when Charles is talking about how great Cardano is, the question that in my mind is first mover advantage, and is that really true? And is Cardano, is that going to be like the Google Chrome, or is it going to be Microsoft Edge? And what I'm talking about can be fantastically illustrated by our friends over at Data is Beautiful. They do fantastic work here. And what they're talking about is the most popular internet browsers, 96 to 2019. And I put this on double X speed because if you want to watch the whole thing, it's kind of boring. But at 2X, it's actually kind of interesting. So what we're going to do is I'm going to start this little guy right now. And remember Netscape Navigator? Well, if you do, you're old like me. But here's Internet Explorer. And this was in 99, mind you. And once Explorer came about, because Netscape Navigator was the first. And some people say, well, that's what Bitcoin is. It's Netscape Navigator. I don't know if that's true, but maybe it's like Internet Explorer. Who knows? One of the first ones. And it was dominating, 4 years, 5 years, 6 years, 7 years. And then came Firefox. I remember Firefox, and it was awesome. It was so fast. It worked out pretty well. And before you know it, you're like, oh, Firefox is going to be like the one to take over everything over. Then there's this thing called Chrome. And Chrome came from nowhere, and all of a sudden just started to get market share. And now we're, coming up to 2010, 11, 12, and look what happens. Chrome starts to dominate. And then Explorer, which had done so much for so long, a decade, falls to the wayside. Now that's Microsoft. And Microsoft said, you know what? We're going to make Microsoft Edge, and we're going to get rid of Explorer because that's going to be the new wave, and we're Microsoft, and we can do anything we want to because we're awesome. Well, the problem with Edge is it never just gained traction, and it just kind of fell to the wayside. And that's a problem if you are one of these big conglomerates who think they can do whatever they want to. Big innovation really doesn't come from like these big, huge companies. It comes from smaller companies which are nimble and quick. They don't have to be saddled with all these different levels of leadership or management, and they just make things happen. So when we see, let me reverse this. When we see something like this, Google Chrome came from nowhere. So the question really is Cardano Google Chrome, and they're going to start to take over? Maybe they take over Ethereum because of what they talked about, all those different three aspects. Or are they Microsoft Edge? That it sounds great, and they made this fantastic product, just didn't work out for whatever reason. And then just so you know, if you don't know what Microsoft Edge is, I didn't know. I had to look it up. I was like, oh, it's from Microsoft. It's supposed to take over Internet Explorer. They're actually going to get rid of Microsoft Edge and go to some other thing called Chromium something or other because it's just not working out. And the reason they did that was because they said, oh, Microsoft Edge is going to be so much faster, and we're going to have interoperability, and it's going to be fantastic for the internet, and people can build on it. Well, guess what? Nobody used it. So the question again now is Cardano Google Chrome, or is it Microsoft Edge? That's the big question. All right, let me know what you think in the comment section. Let's move on. Lastly, Unchained podcast. I had seen this around, and I catch them every so often, but they're very long. Usually they're like an hour. Sometimes they're 30, 45 minutes, but mostly it's like an hour. It's a podcast, right? It's a long format. So, but this one was exceptional, and I have to give it to Laura Shin. She did a fantastic job here. And if you don't know Unchained podcast, you can subscribe to it. It's fantastic. Actually, I'm going to do that right now. Subscribe. And who is Laura Shin? Let's just get it out of the way, because we always want to know who's putting pen to paper, or who's talking, and who's giving us all the information. So Laura Shin is a crypto blockchain journalist, hosts the podcast we just talked about. She's a former senior editor at Forbes, first mainstream reporter to cover crypto, graduated Phi Beta Kappa with honors from Stanford, Master's of Arts from Columbia School of Journalism. And when she is interviewing people, you can tell she's like a real journalist. Like, she's not like me. I'm just an opinion person. I give you some information, and I, inject my opinions or whatever else. She's smart, and she's got really great questions, and she puts out, the right information. So what she's got is two of the heavyweights these days, Mike Novogratz, Raoul Pal, and we covered her a couple of videos ago when she had Chamath Palihapitiya on, where we discovered that Chamath had no idea what DeFi was, which was interesting. So here, I'm not going to play the whole thing. Obviously, this is an hour, but there was 3 things to go over. One, I was wrong about Mike Novogratz, because when Mike Novogratz here, who is the CEO of Galaxy Digital, Raoul Pal is a macroeconomist, and we've featured him on the channel before. When he's talking about, Mike Novogratz here is talking about, hey, it's really difficult to buy Bitcoin and cryptocurrencies. I was like, what is this guy talking about? But I get now why he said that when he talks in a little bit. And they're going to talk about quantitative easing and the reason for the Bitcoin rise. And then they're going to talk about all that helicopter money and why it's good and bad. So let's just take a listen.
And listen, this is an adoption story. And if Bitcoin was easy to buy, it would be a lot higher. And so we've dealt with a few hedge funds that are buying it, right? They've got to go through all the due diligence for their funds, and it's a 2 to 4 week process for their back office to feel comfortable. And so it's not like pick up the phone and call. Then they got to usually talk to their board. Hey, we're going to buy crypto for the first time.
And so that's a great point. I never thought about that. I'm like, okay, this is my problem. I always think about me and how I do things, but I have to look at it from the other side. So Novogratz is in that traditional market type of place. So when he's talking about these hedge fund managers and these institutions, there's a lot of steps they have to take to actually buy things. They can't just go, hey, you know what, I'm just going to go to Gemini and just pick up some Bitcoin for my clients. They can't do that. So they have to go through a lot of hoops. So when he says it's difficult to buy Bitcoin, he's talking about institutional investors, and he's right. I get it. The next thing I want to bring up was he has his pulse on the next big buyers. And I thought about this group, and now I really see it. Once this group gets in, things should take off. Let's take a listen.
A new group of buyers that are coming. They're not here yet. The financial advisor community is giant, right? If you think the bulk of the wealth in America and in Europe is not owned by Gen Z or millennials, though they'd like it. It's owned by, Gen X and baby boomers and older, and, the 50 to 80-year-olds. They don't have Bread wallets or Coinbase wallets or Venmo apps, and so getting the financial advisors to feel comfortable to then sell it to them is a process at Galaxy that we're really working hard on. That's being amped up in a big way, not just.
And I got to tell you, there's no reason why a financial analyst, as things start to move and start to really get in place, why they would not put that out to their investors, to their clients. So if you haven't seen this one yet, this was actually put together by, it was James Todaro, MD. I found this through Twitter. Actually, it was sent to me by a subscriber. Then I had to actually slow it down because it was just too much all over the place. But this is the best performing investments over the last decade as far as percentage ROI. And if you look at it real quick, if you look at, first of all, Domino's Pizza, 23% return on investment. Amazing. It's Domino's. Netflix, this is February 2010 is where we are starting. But if we go through this, I just want to show you that, once Bitcoin gets in there, which is going to be around 2013, I believe. Oops, went too fast. So look at Bitcoin. Just pop, 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 pop. and now we're going at 1,000x, around 1,000 in 2013, and it falls about domino somehow overtakes it a little bit. But if you're starting to think about these financial planners, these financial analysts, and the people that actually recommend certain assets to their clients, when they do and they come in there and they're like, hey, Pete, here's the thing. There's a lot of things going on with the market. We don't know what's going to happen. All this helicopter money's coming in. There's a lot of uncertainty, especially with the Federal Reserve printing to quantitative easing. We don't know what's going to happen. However, there is this asset, and it is the best performing asset class of the last decade. It's new, it's a little volatile, but we think it's going to have huge gains. And over the last, 10 years, it's done, thousands of X percentage of ROI. So what we want to do is we want to take 1 to 3% of your portfolio and put it in this thing called Bitcoin. All right, sounds good, John. I think if you can just do that, these planners, there's no reason why they wouldn't do that. Or, you can put it into Ethereum, and we can take a look at Ethereum and see how much that goes up. So when Novogratz is talking about these big players, these people, I was like, that's true. If they can get in the game, then it would be game over. So we will see. Anyhow, now Mike's going to talk about institutional FOMO, and I think this is going to be the big catalyst. So let's take a listen.
So I think in the next few months, you're going to see a lot of FAs putting their clients into this.
And also, Mike, as you know, is the structure of this is everyone's got their eye on it. And if the price moves up, everyone gets FOMO and has to get involved. And that's at institutional level now.
Yes.
So if it goes up further, the more it goes up, the more the market cap goes up, the more they can justify it to their trustees, and the more people get involved. So I think we're at that tipping point of a virtuous cycle that can continue for a while, but we just need to get through these levels first. But I think essentially every institution, every RIA is almost kind of short the upside calls. Not really. I mean, obviously there's a bunch of people who are, but really what it's all about is people don't have it and they need to get it, but they wait for the price for confirmation.
So it makes sense, right? So I can see all that. And then Laura's going to ask a very smart question. She's a very smart person, journalist, right? And she's going to ask him like, okay, what are the driving factors? What's really going to push these people over the edge? What is the determining situation that's going to lead to Bitcoin to go to wherever you could call it, the moon?
The decision makers have made the decision. It's just kind of a matter of time to let those decisions play out in the market, and we should see the price rise. But I'm wondering, so what is it that's driving those decision makers? What is it about Bitcoin that makes them think that this is the investment to make now during the time of the coronavirus? Is it just as simple as Bitcoin is scarce and we're about to see unlimited quantitative easing, or is there anything kind of more?
Bingo. It's just that simple.
And that's pretty much it. So if you have a chance, I highly recommend to listen to the whole podcast. It's an hour long, a little bit long, but hey, if you got nothing else going on because you're on lockdown like me, why don't you take a listen? So that is it for today. Thanks for sticking with me. I really appreciate it. And as always, I want to say thanks to the supporters. So level ones, they give me a tip of a couple dollars, and I really appreciate everybody that does that. Thanks so much. Level two, pay a little bit more, and they get a shout out. So All Right Soft, Wen Mullet, myself, who else, Dave Plummer, Grant Sharman, Bruce Wood, Baking Benjamins, Noel Flippin' Vegas, Martin Lewin, Michael Ralph, William Howell, Crazy Crypto Canuck, Tessie, Ryusaki Positive, Troke LLC, JC Durex, Crypto Veritas, John Miller, The Office, L. Merg, Michael Jeffrey, The Kel Show, Mage Research, Andrew Herrera, Terry Prosperi, XRP Carolina, Whatever, AE, and Hero Soap Company. They do soap. And that's it. Lastly, my email is dandigitalassetnews@gmail.com. There's a scammer going by the name of dandigitalassetnew@gmail.com. They're trying to get you into trading something or other, but I don't trade, so I don't know what they're doing. So if you get something like that, just put it in the spam folder if you got time. And that's it. So thanks a lot, and I'll see you on the next one.